Everyone, welcome in to another daily editorial here on the KE Report. We're going to get a technical update on the gold price, silver price, also some of the ETF, stock ETFs like GDX, maybe even GDXJ, as we are chatting with Jordan Roy-Byrne, editor of the Daily Gold. We will post a link to the Daily Gold in the show notes. Jordan, look, gold price has been relatively boring recently, and boring's not necessarily a bad thing when you consider it's been boring broadly above that $2,300 level for 2 months now, about over 2 months. I just want to ask you, though, from a technical standpoint, anything noteworthy in this chart in terms of moving averages, where now gold is back to about that 50-day moving average, or the fact that it does seem to bounce right off that $2,300 level? Any technical update you can give us simply on the gold price action?
Yeah. Hey, Corey. I wish I could say something really definitive, but I think it's really too early to say either way. When I look at the daily, I know a few people have been saying today, oh, well, maybe could be building a bull flag here, but we would need to see more evidence of a really strong bounce off 2,300 if this is a bull flag or a bullish consolidation. Now, it certainly would be. Like if my crystal ball told me that gold is not going below 2,300, then if we knew that, then we could say, yes, this is going to develop into a very bullish consolidation. But there's still a chance that it could trade below 2,300. I mean, there's a gap at 2,240, which I've been talking about for a while. So I'm looking at that. And then if you look at the weekly chart, I don't mean to usurp what may be your second question, but if you look at the weekly chart, there is a potential double top. And I want to be careful because it is a potential double top, but it's not a double top as in this is a massive top. It's just kind of a shorter term double top, you could say, because you're coming out of a 13-year breakout, you're breaking out from a super bullish pattern. You're not going to get some huge massive top 2 months after you make this breakout. I mean, I think realistically, the worst case scenario would probably be maybe you come down to 2,150, 2,200. I mean, there's some support in there. I don't know if that qualifies as a retest. So you have that scenario. Then you have the scenario where it's going to hold above 2,300. And then you have the one in between where you can fill that gap at 2,240. So, I mean, in every case, it's really way too early to know which way it's going to go. We still need to give it more time and see how it pans out.
All right, Jordan. Well, I was going to ask you about the potential of the double top in gold, but you just handled it there. And I think you just made the point. I mean, you pretty much covered it, that it's a little too early to know how this is going to shake out. But after such a big breakout, after a 13-year consolidation and break higher, it's unlikely that gold has topped for now. Let's maybe pivot over to silver, where there's a bigger question mark. When you look at silver, it finally did break out above the 26 level resistance, the 28, 29 level resistance, the $30 round number, and now after getting up to 32.75, it's all the way back down below 30 again. It's had a little bit of a rougher ride than gold, and it's not nearly as long of a bullish trend as gold. So how are you looking at the technical setup in silver, or where are you seeing support coming in?
Yeah, I mean, we have to remember silver gained, I'm looking at it now, silver gained 50% in about 3 months. And it is really far above the moving averages. Like when I'm looking at the 100-day, which we mentioned a couple weeks ago, that's at 26. So silver could correct to 28 or even 27.5 in that area and still be way above the 100-day moving average. So that's how I'm thinking about silver. Certainly in a correction here, looking at the daily chart, I don't like the price action or the candles that much, but I expect silver will probably find an equilibrium somewhere around 28, maybe a little bit below. And just thinking about all of these projections or estimations, you could say, I'll be watching the stock market at the same time, gold silver ratio, or the miners, maybe they start to rally before the metals. So there's a bunch of other things that will color my analysis moving forward. But it's clear that gold and silver are both in a correction. Silver in this correction is really underperforming gold. But again, it's still way above its moving averages.
Do we need to be concerned at all, Jordan, that just over the last month, we've seen a couple lower lows, a couple lower highs, all down right now, price-wise, to this almost key, just under 30 level that silver did take a couple months to break out above?
Not really, because if we zoom out, I mean, I'm looking at a weekly chart now of the last 3 or 4 years. It's clear that silver has broken out, and I'm seeing higher highs, higher lows in that chart. I mean, if you look at the last 3 or 4 weeks, I mean, yes, some of the weekly candles are kind of ugly, but the only thing that would really concern me is some kind of scenario where the economy really strengthens and statistical inflation fades. And in that scenario, the Fed doesn't have to do anything for a long time. I think that would be the scenario that concerns me more than just seeing some distribution in the charts right now.
Yeah, we'll keep tabs on it and see how it shakes out and where support does come in. But after a move that high, it is natural to see some of these metals pull back. Let's pivot over to the mining stocks, though. When you look at GDX, it tracked the move in gold. It got up higher. It punched out to a new 52-week high, but it has pulled back some. It's down around that 50-day moving average again, like a lot of these charts are. How are you looking at GDX, and how tied to the gold price is it, or is it moving on the beat of its own drum?
Yeah, I'm not looking that closely at GDX or the miners. I mean, I think so far, I think it's holding up better than the metals, which is a good thing. I mean, there's strong support. It looks to me like right around 32. GDX is at 34.17. So it's been correcting a little while, but it's still, holding for now well above 32. You look at corrections in bull markets, which is something I was writing about last week. The gold stocks historically, like when they have more than a little correction, and again, this is in bull markets, they oftentimes bottom around the 200-day exponential moving average. Now that right now is at 31.17 for GDX. So I just mentioned 32. So there's a lot of support in that area. GDX, again, 34.13 as we're speaking. So it's comfortably above those levels. So I like how the miners are acting so far at this point. Yeah, I still think, gun to my head, I still think we probably will see a bit more selling before we see a bottom. But here and now, so far, I like how the miners are acting against the metals.
Jordan, what do you think it's going to take for these miners or GDX to truly break out here and make runs back to those 2011 highs? More so, I ask this because over the last 4 years, every time gold touched 2100, we've seen a spike in GDX, but it's been lower levels. And right now, where GDX is back to levels that it has been when gold was trading under 2000. Gold's up 2300 and continuing to look strong. Do we simply need to run to the round number 3000 to have a breakout in gold in GDX?
You're speaking about a breakout through the 2020 high or the 2011 high? Yes. So that we're not that far from that. It looks like that's in the low 40s. Yes, it comes down to gold. We've had gold. Of course, it broke through 2100, traded up to 2450. Now it's kind of consolidating. The issue for gold is, at this point, the stock market strength. I don't know how much higher gold can move with the stock market moving up and making higher highs. That, to me, is the one potential headwind for gold. Now, if we're just looking at gold in a vacuum, and gold is going to do a little bit more, it's going to correct a little bit more here, and then it's going to make a higher high. I mean, that potential move from 2200 or 2300 up to 27, 28, that should be the real sweet spot for miners really outperforming. So at this point, I would say it's going to take the gold surpassing 2450 and making that higher high. And then at the same time, depending on how silver's acting, that could pull silver, or if silver starts outperforming again, maybe that pulls silver above 34, 35 and towards 40. So the potential next leg higher for this sector, that's going to be the one where I think you're going to see miners really outperform. So the short answer to your question is basically gold and silver surpassing their recent highs.
Well, Jordan, we've talked a lot in the past about the reason that a lot of the mining stocks underperformed prior periods was because the cost inflation, the cost inputs these companies had really eroded some of their margins. But what we've seen in Q2 is the prices go up where most of the inflation prices have moderated or even come down some. Q1, they didn't really have those higher metal prices in for gold or silver yet. Is it possible that in Q2, when we finally get those numbers, because we're almost done with the second quarter now, and silver and gold have been a lot higher than they've been in prior quarters, could that be a catalyst that kicks things off outside of the technicals where you just see margin expansion?
I mean, I would say it's not a catalyst because it's already discounted by the market. We can't be looking backward and thinking that's going to have an impact on what happens moving forward. I mean, now the market is discounting. Let's see, what quarter are we? We're not quite. We're at the end of Q2, so that's already been discounted by the market. That's why the stocks have had such good runs in the last few months. So, I mean, they're certainly miners are on a better footing here. But again, we need to see that next leg higher for the market to anticipate further margin expansion. But you look at where oil is, you look at obviously statistical inflation has been coming down or at least not moving higher that much. So the big cost increases have already been discounted. So again, if we get a leg higher in gold to 2,800 by the end of the year, I suspect the majority of that is going to flow down to margins, and then you'll see another big leg higher. So, yeah, it all comes back to the next leg higher in gold and silver. But as for Q2, that's already been discounted. The market's looking ahead now.
Jordan, what about the relationship between something like GDX and SIL? So comparing gold stocks to silver stocks, I know that it's, especially in SIL, still a mixed bag of some of those stocks, but you look at a ratio chart here, and quite frankly, the gold stocks have been vastly outperforming the silver stocks for about 8 years. We're up to levels that we haven't seen since really 2010. We are off some of those highs, but will these silver stocks start to play a bit more catch up? Is there more upside in the silver stocks in your eyes?
Yes, there definitely is. I mean, if you have a crystal ball and you're going to tell me that silver and gold are moving higher, we know how this works. Silver stocks will outperform. I mean, you referenced the last 8 or 10 years, and yeah, I pulled up the chart, but we've been in a secular bear for precious metals. And so in a secular bear, yes, gold held up fairly well from 2011 to 2022, or aside from the decline from 11 to 16. I mean, gold has performed well in nominal terms, but not well in real terms. But gold had held up well for that 12 or 13 years, while everything else had just been crushed. But getting back to the chart, yes, during that period, it makes sense that silver stocks would underperform gold stocks. So yes, I think we need some time for silver stocks to really start to outperform gold stocks. The other thing is there's just not that many silver stocks. I mean, there's barely any pure silver stocks. Most of these companies, they had to get into gold to survive. I mean, I'm thinking about Fortuna Silver as one. I mean, they need to change their name, by the way. And then I think SSR Mining was Silver Standard. They had to get into gold. They changed their name. So there's so few pure silver stocks now that we do have to be careful about using SIL or SILJ to come to strong conclusions. And if we look at SILJ, and I'm building my own silver stock index, but I mean, these are tiny companies where there's really not a whole lot of money that's really trading or investing in these companies. So sometimes we have to be careful about assuming the sector's so small that we can't just take 10 or 15 companies that are really small and assume that, okay, well, this is a big, legit sector, similar to GDX or oil stocks, for example. So I know I'm trailing off here, but again, the short answer is if you tell me that we're going to see another leg higher in precious metals, then during that leg higher, I would expect silver stocks to strongly outperform gold stocks, unless it's kind of like a recessionary backdrop. Because that's the one scenario where you can get the leg higher in the sector, but gold is still outperforming, or at least not underperforming silver in that case. So that's the one thing that could kind of disrupt my initial analysis that silver would outperform during the next leg higher.
Yeah, good points, Jordan. And we did just see over the last couple months, SILJ outperformed the rest of the ETFs. So the silver stocks were doing better. SIL is a weird animal too. It has a lot of gold stocks inside that ETF. It's not really a good way to track it. But your point brings up a larger point that we get a lot of questions on, Jordan, and that is the juniors that are not in GDX, GDXJ, SIL, or SILJ. There's a ton of companies that people trade and position in that are not in these ETFs, and their trajectories are much different. You'd made the point off mic before we started that you're still not that interested in the exploration stocks because there's so many other junior developers or junior producers that are still on the discount rack. How are you positioning in your own portfolio? And at what point would you get interested in some of the drill plays, either gold or silver exploration stocks?
Yeah, well, also having invested in this sector for 20 years, I don't have expertise in exploration. I obviously know more than the average investor in this, or maybe I don't. Just my expertise in sweet spot is looking at developers, looking at junior producers. And so that's how I'm positioned. I weight fundamental quality and value of the company and then upside potential. So I'm looking at those. And at the beginning of a bull market, you obviously want to skew, or at least I like to skew more towards fundamental quality. Now, at some point, if we make that move to 2,800 and we get silver getting to 32, 33, going even above 35, then as that move starts to develop, it's interesting because then the lower quality names, then at that point, like they could have more value than like your blue chip juniors, because the blue chip juniors have already moved a lot in that case. So, I mean, that's something I'm kind of thinking about in the backdrop. I mentioned it a week or two ago to my subscribers, but I don't think we're close to that point yet. I still think you can err on the side of quality, but with exploration stocks, yes, I think they would be more interesting if we're looking at 2,700 gold and silver has gone up more. Then at that point, money will start to flow down to that area and they can start to move regardless of drill results.
All right, Jordan, thanks for your insights here. It's kind of a weird situation that we're in with these charts because in a way they're range bound, or at least they've set up a bit of a range here, a little bit off of their highs, but not breaking down by any means. And the stocks, they've flattened out too, but they've also put in some good gains over the last couple months. Arguably, we're still very early in this rally as it is about 3.5 months through. But it also has a lot of people wondering and hoping that the top is not in. We'll follow up with you as things progress. Jordan, thanks as always for your time.